Welcome to this week's Crypto Roundup. In today's recap, we break down why everyone from World Liberty Financial to $5 trillion asset manager Fidelity is getting into the stablecoin game. We also explore why Gamestop shares tanked after plans to raise more than $1.3 billion in debt to buy Bitcoin. Plus, crypto companies celebrate the removal of a key rationale by banking regulators, which they believe had put a target on their backs. And we discuss why Kraken is planning to raise up to $1 billion before it goes public. Finally, the Ripple versus SEC saga is over, with the regulator only walking away with $50 million after asking for as much as $2 billion. Thanks for tuning in to the weekly news recap. Let's begin. Everybody gets a stablecoin. With stablecoin usage surging and growing momentum for a piece of legislation in Congress that will set the rules of the road for the digital dollar industry, more and more companies are looking to get into the game. On Tuesday, World Liberty Financial, a crypto project founded by family members of U.S. President Donald Trump, announced the launch of its own stablecoin, dubbed USD1, which will be backed by short-term U.S. treasuries, U.S. dollar deposits, and other cash equivalents, the company said. The token will be issued on the Ethereum network and Binance Smart Chain, a blockchain created by Binance, the crypto exchange that has sought to forge closer ties to the president's family. The Trump family launched World Liberty Financial in October, billing the entity as a decentralized finance, or DeFi, project that would help match crypto investors eager to borrow and lend from and trade with one another. Critics have said World Liberty Financial's stablecoin launch poses a major conflict of interest for President Trump. "We haven't had a president in recent memory ever sign legislation that could directly affect his financial interest," said Kedrick Payne, Senior Director of Ethics at the Campaign Legal Center, an ethics watchdog group, to the Wall Street Journal. "It is a clear violation of the ethics norm." Not to be outdone, $5 trillion asset manager Fidelity is also in the advanced stages of testing its own stablecoin, according to the Financial Times. Additionally, the state of Wyoming is making steps towards launching a stablecoin later this year, which could be the first fiat-backed and fully reserved token issued by a public entity in the U.S., state officials said at the D.C. Blockchain Summit on Wednesday. The Wyoming stable token, WYST, is currently being tested on Avalanche, Solana, Ethereum, Arbitrum, Optimism, Polygon, and Coinbase's base testnets, according to a press release. And finally, Custodia Bank, working with Vantage Bank, completed America's first ever tokenization of a bank's U.S. dollar demand deposits on a permissionless blockchain by issuing, transferring, and redeeming stablecoins for a bank customer on top of Ethereum, according to a company press release. Crypto Exchange Kraken explores up to $1 billion debt package. Crypto Exchange Kraken is exploring raising as much as $1 billion in debt ahead of a potential initial public offering, according to a Bloomberg report, citing people with knowledge of the matter. The company is working with investment banks Goldman Sachs and JP Morgan Chase on the effort, which is still in preliminary stages, according to the sources. The two banks have also begun conversations with additional banks and direct lenders, the report said. Any debt raised is set to help fuel the company's growth and isn't for operational needs, according to one of the sources cited in the report. As little as $200 million could be raised, they said. Kraken provided details on its annual financial performance for the first time back in January as one of several companies in the crypto industry that is readying for a potential IPO and could go public over the next 12 to 18 months. The company reported an adjusted EBITDA of $380 million based on $1.5 billion in revenue, which more than doubled its 23 performance of $671 million. Trump Media announces intention to partner with Crypto.com to launch ETFs. Trump Media and Technology Group, TMTG, has announced a non-binding agreement with Crypto.com to launch exchange-traded funds, ETFs, through its fintech brand TruthDeFi. The partnership will utilize Crypto.com's broker-dealer, Forest Capital US, to create ETFs focused on digital assets and Made in America securities. The planned ETFs will include a unique basket of cryptocurrencies featuring Bitcoin, BTC, Crypto.com's native token Kronos, CRO, and other crypto assets, according to a press release. The funds are expected to launch in 2025 across the US, Europe, and Asia. Crypto.com will provide back-end technology, custody services, and cryptocurrency supply. TMTG plans to invest up to $250 million of its cash reserves in these ETFs and accompanying separately managed accounts, SMAs, with investment firm Charles Schwab serving as custodian. The products will be available to Crypto.com's reported 140 million users, subject to definitive agreement and regulatory approval. The partnership with Crypto.com comes as the community behind its Kronos blockchain continues to reel following a controversial vote, where Crypto.com went against its community's wishes to push through a proposal to reissue 70 billion tokens that were supposedly taken out of circulation in 2021. Part of the rationale for reminting the tokens, an unprecedented step for the crypto community, was to create a CRO-backed spot ETH. It is a spit in all CRO holders' faces, wrote one CRO validator who voted against the reminting proposal to Unchained on Telegram. SEC only gets $50 million from Ripple. Ripple Labs has agreed to pay a $50 million fine to end the U.S. Securities and Exchange Commission's years-long investigation into the Ripple-linked firm. The company's chief legal officer, Stuart Alderodi, said on Tuesday, "The SEC will keep $50 of the $125 fine." Alderodi wrote in a post on X, formerly known as Twitter, referring to the penalty Ripple Labs was ordered to pay by a New York court in August over unregistered XRP sales to institutional investors. Alderodi said that Ripple has meanwhile agreed to drop its cross-appeal of the U.S. District Judge Annalisa Torres's decision, which found that XRP is not necessarily a security on its face, especially within the context of programmatic sales to unknown buyers. The SEC, under the leadership of former chair Gary Gensler, sought a $2 billion penalty against Ripple Labs for what it claimed were unregistered securities transactions. The SEC first brought its lawsuit against Ripple Labs during U.S. President Donald Trump's first administration. Gamestop tanks on plans to buy Bitcoin. Video game company turned meme stock. GameStop's shares fell sharply on Thursday after the retailer announced plans for a private offering of $1.3 billion in convertible senior notes to use toward general corporate purposes, which could include investing in Bitcoin. Investors reacted negatively to the announcement, while analysts questioned the timing of the decision. "We find it hard to understand why any investor would pay more than 2x cash value for the potential for GameStop to convert that cash into Bitcoin, particularly since the same investors can invest in Bitcoin or a Bitcoin ETF themselves," noted Wedbush Securities analyst Michael Pachter to Seeking Alpha. Intercontinental Exchange partners with Circle to explore new product offering. Intercontinental Exchange, ICE, the parent company of the New York Stock Exchange, is exploring using Circle's USDC stablecoin and USYC tokenized money market fund to develop new products and services. "We believe Circle's regulated stablecoins and tokenized digital currencies can play a larger role in capital markets as digital currencies become more trusted by market participants as an acceptable equivalent to the US dollar," said Lynn Martin, president of the New York Stock Exchange, in a statement. "We are excited to explore the potential use cases for USDC and USYC across ICE's markets." This news comes as the total stablecoin market, led by Tether's USDT with a $144 billion market capitalization, continues to set all-time highs. The tokenized treasury market continues to grow as well, surpassing $5 billion for the first time as the assets are increasingly used for leverage in margin trades. Major bank regulator removes key rationale for blacklisting crypto industry. The Federal Deposit Insurance Corporation, FDIC, appears to be following in the OCC's footsteps by also moving to extinguish the use of reputational risk as a way to supervise banks. The FDIC is actively working on a new direction on digital assets policy, said Travis Hill, who was appointed acting chair of the FDIC in January by President Donald Trump, in a letter sent to Repreno Dan Mousser, RP, on Monday. Hill had previously urged the agency to take a more open approach to crypto. In his letter, he said banking regulators should not use reputational risks as a way for supervisory criticisms. While a bank's reputation is critically important, most activities that could threaten a bank's reputation do so through traditional risk channels, e.g., credit risk, market risk, etc., that supervisors already focus on, Hill said in the letter obtained by The Block. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.com newsletter, that is unchainedcrypto.com newsletter, and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aranovich, Megan Gavis, Pam Majumdar, and Margaret Correa. The weekly recap was written by Stephen Ehrlich and edited by Carrie McMahon. Thanks for listening.